Welcome back. We're with David Burrows. David, let's get to a tweet now from Gilles. He would like to know if you'd buy BAM, Brookfield Asset Management.
So to be clear,
yes, sir.
We like the asset management business,
okay.
right? Asset management in lots of different ways. Yeah. Brookfield Asset Management have been very, very smart in the way that they have put together a portfolio of private assets, alternative assets that they manage. They have purchased themselves, they've partnered with institutional investors, but they get paid a management fee and a carry on a lot of their assets. They've been able to create dividend growth that has been consistent over time, and it's been a very steady performer of a diverse set of alternative assets. So whether it's property or renewable power, you know, these things are sort of long-term positions. It's not a big yielder, but there's been great dividend growth, sort of 8%, 9% dividend growth. So you're buying a portfolio of alternative assets, trading at a new relative high versus the market. You know, hangs in well through a storm. Sort of for a conservative investor, I think it's a great hold. We don't own it currently, but we do have some investments in asset management, including our company. I think it's a good hold.
Okay, great, David. Thank you. Ready to get to the phones now?
Sure.
Let's do it. Colin in Sarnia, Ontario. Hi, Colin.
How are you? Good afternoon, David and Anita. Thanks for taking my question. It's about hacks, and I'm thinking with trade wars between two, I'm going to call them communist governments, and the U.S. I'm just wondering if hacks, kind of like over the next year with the elections, kind of likely to see a spike in business and sales and just generally on an uptrend in, I assume, tech, which is leadership, I think, at this time. So that's my question. Hack.
Okay,
Colin.
So Colin, I do like technology as a continuing theme, and of course within technology we have cloud, we have 5G, we have cybersecurity, you know, you have software as a service. So this whole area, I think, continues to be really attractive. It is more volatile, that is for sure. The cybersecurity space has been a little weaker recently,
right?
But I think it's hard to make a case that this isn't going to be a continuing point to be focused on. So I like it. I think that you would like to see it hold above the low from May at 36.80. I think it's 37.60 right now.
Got it.
And I think that should market stabilize in here, it likely performs quite well. I'd use 36.75 as a stop.
Okay. Thank you, David, for that. Colin, thanks for calling in. Let's get to Joel now in Vancouver. We'll switch over to Canadian Financials. Hi, Joel.
Good morning, or good afternoon, I guess. My question is about his earlier comments about places where people can get a return of 6% in stocks versus very little in GICs. So my question regards basically the bank shares and what kind of returns I could get specifically, for example, TD, but comparing that to an ETF, say, in American banks, and which would he recommend?
All right.
Okay.
Thank you, Joel.
So first of all, when we look at TD Bank, we know that a big piece of TD's business is U.S. business.
Right.
So you're buying a 4% dividend stream. They've grown the dividend about 6% a year over the last 5 years. You're making a call on North American economies. I think the North American economies are actually in pretty good shape. So I think that I would not have a problem being there. If you used one of the ETFs from the U.S. banks, like the KBE, you know, lower yield, but probably a little bit more dividend growth. I think TD looks quite attractive as a Canadian investor because you're getting, you know, best of both worlds. I'd be very comfortable in TD here.
Yeah, you get to get the dividend, and you also get your U.S. play.
If you think that we're not going into recession, we're not in the camp that we're headed to recession.
Okay.
We think that we get a soft landing later in the year, and so I do think that you're going to see some stability in the U.S. consumer economy and some reacceleration in the economic data late in the year. And if you like that, then you like the North American banks.
You've also got some conspiracy theorists, too, that come out and say, yeah, to your point, it might just be that soft landing, a little bit of turbulence, if you will, through the end of this year, maybe early next year, but heading into, coincidentally, the election season of the U.S. We'll probably see some more juice south of the border. So let's get back to energy now. We'll bring in John from Edmonton. Hi, John. What's your question for David?
Vermilion Energy was wondering why it's dropping in the last few days. It went up to 23.65. Now it's back down to 20.85 today.
Yeah. I'll just say this. I think you got to be careful with the energy space in general. The entire energy sector is under pressure. Oil prices, when you look at the way that oil producers and the gas producers are behaving, it tells you that they don't believe that the current pricing in oil is here to stay.
Right.
So I've always found that if the stocks are not leading, you should take the cue. So if stocks are really underperforming oil, it tells you likely oil prices are going to weaken. And we know that in the U.S., oil production and finding oil has become so predictable. It's easy to attract capital to do more drilling, and as a result, it's very hard to get big spikes in price. So I just would be cautious in general with the energy space.
And John,
I don't think that this is something specific to Vermilion.
Yeah.
If you take the XOP, which is the U.S. producers ETF, it was trading at 44.80 in the fall of last year. It's 21.72 today. It's a new low. It's a new relative low. It's backed off from $33 just at the beginning of June. This is a group that's under pressure.
And specifically Vermilion, John, to your point, the big sell-off that we've seen here, they did come out with their second quarter results. Didn't look like they were very impressive. And as a result, we've had at least two big firms slash their price targets for Vermilion. So that could be why we're seeing a lot of weakness.
People very cautious on the space.
You got it. And
we
that
have
dividend, right?
Virtually no exposure.
Okay. All right, David. Thank you for that, John. Thanks for your call. Let's get to Jerry now in Toronto. Hi, Jerry.
Oh, hi, Anita and David. David, I'd like your opinion on Celgene. Obviously, there's the buyout from Bristol Myers, and so really the question is, what's your opinion of Bristol Myers going forward and Celgene and that sort of the kicker that they have in the buyout? What do you think about it fundamentally? Are you in the biopharma space at all? Do you own Celgene or any other in the biopharma sector? And Anita, if you could give us consensus, I'd appreciate it. Thanks very much.
You got it, Jerry. Ready to go with that, David. Three buys, 17 holds, no sells, with a 12-month price target of $100.33. Go ahead.
So look, we're heading into an election cycle.
Yeah.
And biotech and pharma are going to be under pressure from both sides. So the pharma sector has been behaving very poorly. If you take healthcare as a group and split it all out, you've got pharma behaving about the worst, and on the other side, you've got medical devices that have been behaving extremely well, right? Companies that make hips and knees and heart stents and so on. We have exposure in things like Edwards Life Sciences, Boston Scientific, very, very attractive. You look at the large pharma companies, they are really under pressure. So if their conversion is Celgene to Bristol Myers, I have a hard time being excited about it because the market rallied very sharply from December through July, and the pharma stocks are trading basically lower than where they were in December. They just haven't participated. So if they don't participate in a rally, you get into a little bit of chop like we get into in August, sometimes the beginning of September. I just don't think that it's the most attractive place to be.
Healthcare off the table for you, what, at least through
No,
the election,
devices
okay.
I think continue to look really great, and they're dependent on the economy because a lot of it is discretionary spending and aging demographics. Pharma, hard to see how they continue to get price increases like they've had in the past.
Okay, David, thank you for that. Folks, you're watching Market Call on BNN Bloomberg. We're taking a break. We will see you on the other side.